even though maybe Robinhood is still in that disruptor phase or is in the early innings, as my colleague Spencer Jacob pointed out in his column recently, the market caps of these companies aren't that far apart.
Yes.
Has the market kind of gotten ahead of itself? Is it already pricing in perfection for Robinhood at this point?
I'll unpack your question into two: the fundamentals and the valuation, right? So as I mentioned, Robinhood is 3 to 5% of Schwab's assets.
Mm-hmm.
But they're about 15 to 20% of revenues, right? So if you think about that—
So more revenue per dollar of assets.
Exactly.
Okay.
Robinhood definitely makes more money per dollar of assets, and it's a bunch of things. They have more crypto. They have a more active trader skew. They do more from an active trader perspective. Put some numbers out there, and hope I don't get too technical here. But if you look at the return on assets, the revenue as a percent of assets.
Okay.
At Robinhood, that number is between 1.5% and 2%. So roughly speaking, on every dollar of assets, they make about 1.5% to 2%. On Schwab, it's about 20 basis points to 30 basis points.
Which is 0.2, 0.3%.
Exactly.
Okay, yeah.
And then on an active trader platform like Interactive Brokers, it's about 1%, right? So the real measure is more like against an Interactive Broker than a Schwab because, the Schwab client base is obviously skews a little older, a little long-term investing. They're not trading as much. So just the monetization is naturally a little bit lower. So the question is the gap between like an Interactive Brokers and a Robinhood. And again, that tends to come from things like crypto, prediction markets, the gold accounts, all that tend to drive incremental monetization.